Good Friday morning, everyone. Thank God it's Friday. After the markets this week, maybe we ought to just say, thank God it's Friday and quit right now. The question of the day is are we seeing the market crash in front of us right now? Now, I'm not going to be somebody who is calling out a crash. And by no means is this what I see as a market crash. I mean, we'll take a look here in our pre-market and just take a look and see how much the markets have pulled back. They did break some key levels of support yesterday that I was looking for them to hold. So at this point in time, all bets are off. And it does appear that we could be going lower. Excuse me, going lower. So that's what the outlook is for today. So, but before we take a look at some of those things, let's get into some housekeeping and state our normal disclaimers and all that good stuff. And just so you know, if this is the first time that you are viewing our video, my name is Rick Kaufman, and I have my own little business here called LMA Trading, and I'm an older trader who's rather risk adverse, and so I look for high probability trades. Right now, it's kind of hard to find one. And so, working to try to play the trend is what I'm doing. These videos are part of my trade journey. They are part of my trade journal. I record them as part of my education process to help me develop a trade plan for the day. At the end of the day, I have no idea what the markets are going to do. They're going to do what they're going to do. The markets is a collective group of people that are basing their predictions just as I am. And at the same time, many of them are acting upon emotions, and the price action is just a bunch of emotions that, you're trying to figure out what the next move is going to be. So at no point in time is anything here should be misconstrued as a as a stock pick or any suggestion to make a trade or sell, and get out of a position or buy or sell a particular option. Understanding that stocks and options have risk, and those risks may not be necessarily suitable for each investor. Do your own due diligence, do your own research, do your own pre-market prep. I believe pre-market is probably the most important time of the day as far as anybody's trading, and but to each to his own. This is what I choose to do, and I just happen to share this on YouTube, and I put those links as part of my trade journal so I can review, and I make a play-by-play as the day goes on. If you'd like, I am starting to go back and post those play-by-plays in my comment section. So you can not only watch the video, but you can also come back later in the day and catch the play-by-play as far as to see, was I, how did I do on my, preparation for the day? And did things play out the way I did? And did I follow my trade plan, or did I let emotion and just blow it all to hell in the basket? So with that being said, let's get into the trade or into our pre-market prep. The VIX is still relatively high. It's 2356. It popped back up here yesterday and in after hours yesterday, almost up to 25. So as long as we stay above 20 on the VIX, the VIX is not necessarily going to be our friend. The volatility is up there. It's been up there all week long after I pop up last week to almost 30. I think it was like 28 and some change, 28.80 or something like that. And so we pushed the 25 again. So we've pulled back a little bit off of that. But all indications are indicating that the VIX the volatility is here to stay, I think, for a while. So until we somehow get some of the fears calmed down in the market and the selling, this is by no means a crash, or we're not going to see. I don't think we're going to see what we saw back in March of last year. That was unprecedented, and so this is, as long as our long-term trend seems to be still seems to be rather bullish. But on our long-term trends, our weekly charts, and even if you want to go out longer, monthly charts, we're still very bullish. Weekly charts are getting a little suspect, getting close to that 21 level, breaking that. And my rules indicate that if we break below the mean, which I use the 21 EMA as a mean, and we have two closes below the 21, that essentially is a trend reversal. On the daily charts, we have that in place all the way around. And on all four major indices, we have that. So let's go ahead, and this is what the VIX is looking like on the daily chart. I just wanted to point this out. I'll be watching the VIX very closely, but at the same time, I'll be also paying attention to the Treasury bond. It's actually down below 1.5%. So that's a plus. So maybe but that, I think, is just the calm before the storm. And right now, the markets are not. It doesn't seem like the markets or the Qs are reacting a whole lot to that. So let's go ahead and jump into the Dow. So when we take a look at the Dow, as you can see here, we have a weekly. So right now, the Dow would really have to rally to get back above the 21. So this week, we could have a close below the 21. And well, let's see what next week. So next week's going to be in a very important week for, the markets, because we've had such a huge down week, basically the last 2 weeks. So this is not looking well going forward. On the daily chart, we are definitely back at the in a downtrend. So what I'm doing is looking how to play this downtrends. We are looking at shorting the markets, but shorting the markets when we get a rally back to the mean. Right now, it appears that if the VIX continues going higher, then the markets are probably going to still continue to go down. But we've got this level of the previous low last week. We broke that. We pierced that already this morning. So we'll see if we could close. If we get a close, basically a close below the low of the previous day, then we definitely it's not going. It's not a great start for October, but October typically is not a great month anyway. So from a seasonality standpoint. So let's take a look at the Russell. The Russell's the only one realistically. We've got it's still chopping in this range. As you can see here, it's not the daily chart's kind of neutral as far as the trend. It's neither in an uptrend nor in a downtrend. The weekly chart is in a downtrend, but just very, very, very little. So if anything, the Russell just a few weeks ago was the ugliest looking chart. And probably right now, the Russell is probably the better looking of the three charts, the small caps. So if you go back and check the history does not always repeat, but it does rhyme. That you'll find that a lot of times in a market like this, the Russell has and the small caps have a tendency to benefit from markets like this. So I'll be watching the Russell, and but we are playing in this range. So this might be, so we'd be looking at, buying the dips on the Russell and probably picking up, IWM or the RUT and playing that up and then shorting it back down. So kind of playing in this range of -1 ATR to +2 ATR and looking how that may, how that may play out. Now we are starting a daily squeeze today. So we do have a squeeze indication on the squeeze histogram, but the momentum is to the downside. So this is by no means is a buy, and we have no buy signals on anything right now on the indexes, and it's very hard to find a decent buy signal on any stocks. Everything is kind of looking rather bloody and kind of nasty right now. So let's take a look at the Qs. Being we were just talking about the Qs. The Qs on the weekly are at the 21. So, the trend is still intact, but it's getting slammed pretty hard. But it's not down a whole lot to here today. And that might have a little bit to do with the bond rate. like I said, the bond rate, let's take a look at it again. It's down 1.486%. So it's down below that 1.5. And so from that standpoint, the Qs may be benefiting from a little bit of a bounce on the bonds. And so I typically follow that here on the ZN chart here. We talked about this in yesterday's video. If you're not real sure, go back and review yesterday's video where I talked about, the bond rate, and this chart is an inverted from what the bond rate. So when the bond rates are going down, where this is indicating the bond rate is coming up. So so it has ever slightly moved. The bond rates have moved, the chart has moved up, but the bond rates have gone down. So if you want to put that in context, I just add a minus sign. I just add a minus sign in front of that, and that will flip my chart around. And so that way the bonds are on the way down in price, and now this shows it going down. So, that can, for me, I am a little dyslexic and things like that. So it's hard enough trying to keep things in perspective on everything else, and let alone trying to figure out, you got one thing going down, but the chart's going up and vice versa. So what does all that mean? So this is, so we might see a rise if the bond rate keeps going here. We might see a rise in this, and if the bond rates begin to drop here, okay, then we may see volatility begin to drop a little bit also, like on the VIX and some of the other fear indexes. So let's jump into back over to the Qs. So again, when I'm looking at the Qs, I want to see us hold this 21 on the weekly chart to maintain the long-term trend. Momentum is to the downside. Everything is still selling off. We do not have a buy signal. So, according to our RAF, there's still more downside to go before maybe we get a decent buy signal here on the weekly chart. But, again, how far down do we want this to go? I don't know. We may go about -1 ATR or so before, we go anywheres. But if we break this resistance or this support at 14,700, which we are just below that right now. So if we cannot hold that and go up, then we're going down to 14,400, roughly 14,450, and this is where the last line in the sand that I have. And then we'll begin to look at probably start looking at the 14,000 price zone for support if we break below this. Right now it looks like we're holding this in pre-market, but until we get into the cash session and let's see what the buyers do. We've got to get the buyers. We've got, if this is going to be, this is where we're going to draw the line in the sand and hold this here. This is where it has to be done. And October 1st, Friday, would be a good day to start that rally going into next week, because this week is pretty much toast. So what can we salvage and set up for next week? When we take a look at the S&Ps, the S&Ps, looks like we'll, if we don't get a rally here in the S&Ps, but they're going to follow the Qs. The S&Ps are heavily weighted as far as in the tech sector. So it's, over 40% of the S&P is tech weighted. So if the Qs do rally and go well, then, we may see a little bit of a rally here in the SPY and the S&Ps. So, again, we need to get back up and close above, 43, 43.20. We'll just call it 43.50. And so if we can get back above here and close, up here at our line in the sand, at 43.47, then this should put us above the weekly 21, which would keep our long-term trend, bullish trend, intact as far as an uptrend. So this is tough to play. Long-term trend is in an uptrend, and typically we don't want to short uptrending positions, but our daily trend is in a downtrend. So it's short-lived. If we play the bounce, it's going to be short-lived. We're going to be in, we're going to be out, and then we play these bounces back up to the mean. Right now, we're not getting a rally up to the mean. So, the rallies have not really had much energy behind them. So we'll see what this has to hold if these rallies can take off and move, because this is what it's all going to depend on. So hopefully, right now, my play for the day is to sit on my hands, wait. I've got one position on the long side. My Home Depot tanked yesterday between the Home Depot and Walgreens. That's my only long position. My other two shorts are working out well. And so Home Depot just sold off big time. Like I said, Home Depot and Walgreens made up about 40%. Roughly, from what I understand, about approximately 40% of the Nasdaq, or not the Nasdaq, of the Dow selling off. So it my Home Depot basically got roasted. And take a look at that here real quick. And so right now it looks like we're going to open about roughly about $1 down. So it broke above the 21. We got to close below the 21. Our intraday right now is all trending down. It's overextended on the intraday, but maybe we'll find a bottom here and get a bounce back up. But if I get another close below the 21 here today, then my rules indicate that I'm out of this trade. So this would be a loss for us, but wouldn't necessarily be a huge loss, but we would lose a little bit of money. And then we have shorts on Dollar Tree, and we have a short on Nike. And those trades, Nike trade is doing well right now. It's holding its own, but it's still trending downwards. We're looking at filling the gap on Nike, and just so you can see that here on this chart, we're looking at we're playing this to the downside to fill this gap here. So I'm looking at catching about 70% of this gap fill. So we are close. We're about halfway to where I want to be. So if we still continue getting selling pressure, then that's what we're looking at here. And then we have another short on Dollar Tree, and so Dollar Tree had a huge spike upwards, but we recovered about half of that run up yesterday. This was, but we held the position. It was almost to our max loss on our put debit spread, and so we decided to just stay in it. I felt like this was just a flush up due to the offering. I think they came out with 2.5 million, or to whatever it was, stock offering buyback, and which caused a rally. So that was just kind of an overreaction to a stock that's probably not going to see anything sell for $1, and then it has supply chain problems. And so I believe price will be coming back down. It's going to, so this now becomes a fill the gap to the downside, and that's what I'd like to see happen, because it rallied up to here, it rejected here, and we sold off. And I would continue right now. It looks like the sell-off is going to continue on Dollar Tree this morning. So that's good for me. That's how I'm looking at playing today. So I would like to look at probably looking at the S&P or the NDX, depending on which direction it's going to go. But the Qs are now up to 18. They've gone from red to green, and so they're up almost 20. And that most likely is due to the bond rate. So the bond rate has dropped another, 1/100th of a point. So it's down to 1.484% now. So as the bonds and treasury yields probably go down, we're going to see the Qs respond, and in kind, we will probably see the S&Ps also do the same. So with that being said, you guys all have, let's see, the S&Ps are plus, they are also in positive territory. The Dow is now positive, and so is the Russell. So we're getting a little pop here this morning in pre-market. So, and the VIX has dropped dropped almost about, looks like about 70, 80 points here, or, and on this morning. So we're approaching 23. But as long as we stay above 20, any rally, anything that we see here is going to be very subject to a potential fail, because if we just don't have the energy to push those much higher, because there's going to be a lot of resistance going back up. So you guys have a great Friday. Happy Friday. Make sure you click the like button, subscribe, and check back later. We'll post on today's video. We'll post some play by play, and we're going back into some of the other videos and putting those in there too. So guys, have a great Friday. Have a great weekend, and let's get October started off. Hopefully we can get this turned around and moving, if anything, at least start going sideways instead of going down. So you guys have a great day. We'll talk to you later.